Hello students, I'm Vipul Mittal, and in this session I will discuss how contingency is defined by the FASB. So a contingency is an existing condition, situation or set of circumstances involving uncertainty as to possible gain or loss to an entity that will ultimately be resolved when one or more future events occur or fail to occur. So a lot of things in one sentence, and all these define contingency. So it is an existing condition, situation, or set of circumstances. It is not a future condition. It is not a future condition. It is an existing condition. For example, you sell a product to customer A, and the product is faulty. Because the product is faulty, customer A files a lawsuit against you. This is the condition. So you may have to pay a compensation because the product is faulty. Customer A has suffered damages because of that. Customer A has suffered loss because of that. Customer A has filed a lawsuit against you. You may have to pay a compensation. We are talking about a contingency. That is existing condition, situation, set of circumstances. All right. And this involves uncertainty. That is, you are not sure of the outcome of the lawsuit, whether you will win or lose. You are not sure of the amount of damages in case you lose. You are also not sure of the timing of judgment. So you are not sure regarding outcome of the judgment. You are not sure of the amount of damages. And you are not sure of timing of judgment in this example. So a contingency is an existing condition, situation, or set of circumstances involving uncertainty as to possible gain or loss to an entity. And this contingency may be a loss contingency or a gain contingency. So you sell a product to customer A, product is faulty, customer A incurs a loss, customer A files a lawsuit against you, you may have to pay a compensation to customer A. Loss contingency, because it is an existing condition and it involves uncertainty as to outcome of judgment, as to timing of judgment, as to amount of damages. Loss contingency. Take another example that you buy goods from vendor B, and after purchasing goods from vendor B, health hazard is discovered related to the goods. Safety issue is discovered related to the goods. You file a lawsuit. So you buy goods from vendor B, and then you later discover safety issues, health issues related to these goods that you have bought from vendor B, and you file a lawsuit for the damages. You incur losses, you incur damages, you file a lawsuit against vendor B. Now, you may get some damages from vendor B. You are not sure of the amount of damages. You are also not sure of the outcome of the lawsuit, that whether it will be in your favor or not. And also, you're not sure of the timing of judgment. There is an uncertainty. There is an uncertainty as to possible gain. You may receive damages from vendor B. We're talking about possible gain. We are talking about gain contingency. All right. So what is a contingency? A contingency is an existing condition. We're not talking about a future condition. It is an existing condition, situation, or set of circumstances involving uncertainty as to possible gain or loss to an entity that will ultimately be resolved. There is an uncertainty right now, but it is not that that uncertainty will remain forever. It will ultimately be resolved. When this uncertainty will be resolved, for example, so if the customer has filed a lawsuit against you for faulty product, there is an uncertainty that you may or may not have to pay damages, or there is an uncertainty regarding the amount of damages or outcome of judgment. This uncertainty will be resolved when judgment comes in future years. So in future years, when the judgment comes, this uncertainty will be resolved. So this uncertainty will be resolved when one or more future events occur. For example, in this case, when judgment comes, the definition of contingency largely revolves around uncertainty. So a contingency involves uncertainty, uncertainty regarding possible gain or loss, uncertainty that will ultimately be resolved. And this uncertainty will be resolved when one or more future events occur or fail to occur. Now, this contingency may be a gain contingency or a loss contingency. And I have explained gain contingency and loss contingency in another video. So watch that video to get a complete understanding on contingency. We'll connect again. Goodbye.